Welcome back to the Avenue. Thank you for joining me today. For all my new viewers, thank you for stopping by. And for the people who have been watching me for a while, thank you again for coming back in. And today we got a great show for you, another great show. And so today I'm taking a few pages out of the Investor's Masterbook as far as the strategies that will help you do well in the stock market. That's what we're going to talk about today. Those 6 strategies that will help you gain and do very well in the stock market. Stay tuned for this one.
She's a go-getter, alright. What a beautiful sight. Anything she sets her mind to, she stays on it day and night. She writes the checks, she signs the deeds. She plants the fruitful seeds and still finds the time to meet all her family needs.
What if I were to tell you that people don't do bad in the stock market because they pick bad stock? They don't lose money because of picking bad stock. But what if I told you they lose money because they have the wrong strategy? So today I'm going to share with you from some of the best people in the stock market as far as picking stock and having those strategies, the master investors, what they do as far as strategies, the different strategies that's out there. I'm gonna share 6 of them with you so you can look at the one that may work best for you. All right, the first one we're gonna start with is the buy and hold strategy. This is one of my favorite, and this is one that's on the top of the list of most of the master investors out there. And the buy and hold strategy just says simply buy solid, great companies or ETFs and hold them for years, if not decades at a time. Over time, they will increase in value more than likely, and they will make you money more than likely over time. There's nothing, a stock that you could, you've heard stories of people that bought Apple back in the day when it was first introduced, and how much money, how many millions of dollars that they would have made had they held the stock, or if they bought $1,000 worth of Apple, how much is worth today. So what I'm saying is buy solid companies and just hold them. That is my philosophy. I don't flip here and there. And for the ones that I know that I feel like they're going to be my winners, the ones that I know that's going to go into the future and could potentially make me money, lots of money, those are the ones I'm going to buy and I'm going to hold. Now, every now and then I get sidetracked, and go down the trail and I'll see something. It's like, well, they say it's good, so let me check into it. If it looks pretty good, I may buy some, but I'm not really well invested into those kind of side companies like that. But some of them I'm holding for pretty much forever until I decide to sell everything and get out of the stock market. So the buy and hold strategy is one strategy that you want to look into for yourself because it is a winner. That's the number one strategy, I would say, for me. Up next, this is probably the strategy that's best for most everyday investors, and that's the dollar cost averaging strategy. And that strategy entails whether it's a monthly, weekly investment into the stock market, you do it every week or you do it every month. You set aside a certain amount of money that you're going to invest into the stock market every week. Could be every day, could be every month, but that money goes in bar none. That's what it's earmarked for, and that's where it's going every single month. So if the stock is up, if the stock is down, you're still buying, and that's where the dollar cost average comes in, because you're not going to always hit it at the high, you're not going to always hit it at the low, but as long as you continue to do this consistently over the years, you're averaging out the highs and the lows, and you're making money more than likely on those stocks. Let me throw in right here that this is not financial advice or anything, investment advice. This is just to make you aware of the strategies that's out there that the top people use. And once you know what strategy you want to use, once it's explained to you and you can pick the strategy you want to use, start using that strategy and make yourself some money into the future. This next strategy requires patience. Let me say that again. It requires patience, and that is value strategies. So if you want to go in and buy value stock, you can do that. But what value stock is if a stock normally costs $100 and you can get it for $75, It's a waiting game. So when it drops in value, even though you know it's much more valuable than that cost, you go in and you purchase it at that value and then you watch it run up even more. So this is the value stock type of strategy out there. And like I said, it may take months, but every month, you guys, every week, the stock market is on sale. Something is on sale in the stock market. And it's if you have enough courage, once it goes on sale, to purchase. Today, one of my ETFs was on sale. I went in and I purchased a little. It fell some more. I purchased more. And once I finish recording, if it falls even more, I'm going to purchase even more. I'm not afraid to go in because I've been waiting for this. But this is an ETF that I'm going to hold, right? So I'm buying and holding, but I'm also wanting to buy it at the right price so I can make as much money as I possibly can once it goes back up, because it will eventually go back up. So this value investing, that's one strategy that you can use as far as investing in the stock market. I want you to invest a little time in me with your little finger. Hit that like button and that subscribe button so that you can stay up to date on the latest information that I'm bringing it to you. I'm bringing it to you, you guys. You all asked for this, and so I want to give you more information on investing and the stock market so that you won't have an excuse. You'll have some things to research, check out for yourself, and make those investments so you can grow. It's not enough to save money these days. Even at the high interest bearing saving accounts, that's great. But it's not enough to get ahead with this inflation we have going on. We need to make our money work for us. And the best way to make it work for us is to invest. So choose your vehicle and go out there and invest. Strategy number 4, it is growth investing. And that is finding companies, not what they're worth today, but what they're going to be worth in the future, that they're going to grow. And sometimes you take up and down hills because they start out as a small company and then they grow to be something grand and great. But it's going to take years, it's going to take time for them to get there. But if you can see the vision into the future and you know that this is a good thing to be in and you watch it, you can watch it grow. So these growth companies, and there's growth ETFs out there that you can invest in that people will pick for you, and they'll have a basket of growth stock that you can invest in the growth ETFs and watch your money grow that way. If you don't think you're good at picking a stock and knowing kind of what it's going to be like in the future, not necessarily what it's worth right now, but what it's going to go to in the future. And there is information out there, you guys. You can look at companies on TV. You can look at Yahoo Finance. There's all kinds of YouTube people that will talk about these companies that make sense, make it make sense for you. And that's what we want to do. But there are growth companies, and that is a strategy that you can invest in, growth investment and growth companies. The safer way to do it is find a growth ETF if you're not good at picking these growth stock yourself. Or you can go into a growth ETF. What do they have in there? What are their top 10? Take a look at those, researching for yourself. And if you want to invest in 1 or 2, 3 of those, you can do it like that. Anyway, hopefully that helps. There are stock out there that pay dividends, and there are some folks that they strictly invest in dividend stock, because you will see every quarter, sometimes every month on some of these stocks, but every quarter normally they will show how much money they've made, and then they will pay you the dividends on that. Now it stays in, depending on how you have it set up, it can be reinvested back into that stock, or it can go into your brokerage account to sit there for you to do whatever you want to do with it. But they pay dividends, and some people are getting monthly dividends, quarterly dividends that will help them gain, and they may use those dividends to live off of while not touching the stock. So the stock is continuing to grow and you're not touching it, and you're using the dividends to live off of. Some people use the dividends to buy more stock. So they're gaining more stock, which means more stock, more dividends. And at some point in time, they can stop buying the stock and use those massive dividends to live off of. So this dividend strategy is a long-term strategy, but it's something that you might want to think about, because they pay dividends, and you can go in and research the stock to see how much dividends they pay, and if it meets your requirements about how much dividend they pay, how much you're gonna have to pay for the stock, just map it all out, see if it's worth it, and then you can start buying dividend stock. And the last strategy that I will give you for today is the ETF strategy. Some folks strictly invest in ETFs. Nothing wrong with that. They pick a sector and put their money there, go to sleep at night, and don't worry about it. You don't have to worry about, should I buy more of this? Should I buy less of this? Just invest in the ETF. And if that's the sector you want to be in, which you're invested in many stock, okay? You're not invested in just one, you're invested in a lot. And normally the ETFs are somewhat managed. So if something is not going good in the ETF, they may be dropped from that ETF and replaced by something else. Okay, so you have mutual funds out there that are actively managed, and they do this all the time, but they charge you a higher fee in order to do that. So you want to look at how much it's costing you to be invested in this stuff. I go the ETF route because there's some good folks out there picking these ETFs, and I can see over historically how the ETF has done and what they're invested in. I can look at those companies to see how those companies are doing, and if it's something that will match my investment strategy, which is long-term hold, I can invest in the ETFs. So that's another strategy that you can invest in. Now, briefly, I want to go over some of the biggest mistakes investors make when they're choosing strategies or just investing in the stock market. And one of the biggest mistakes that they make is choosing a strategy and then not sticking with the strategy or expecting something else out of that strategy, right? So you choose a buy and hold strategy, and this is what I'm going to do. And then if it dips, all of a sudden you want to sell when the strategy was buy and hold. It wasn't to buy, and if it dips, let me sell right away. Or you pick a dividend strategy and you want it to grow massively, but dividend strategies are really for paying dividends. They're slow growth, but they'll pay you a dividend every quarter or twice a year or monthly, whatever the dividend is. So don't get the strategies confused as to what you purchased it for and what it's going to do. Sometimes the mistake is we don't stay in there long enough to let it do what it's supposed to do, right? We want the microwave. There is no microwave strategy for the stock market that you can't study. There's day traders and stuff like that, but there's no microwave strategy where you go in and all of a sudden it's going to do exactly what you wanted to do right away when you wanted to do it. So sometimes we have to stay in there long enough to see the benefits. You plant the seed and let it grow and then reap the harvest. So we have to stay in there long enough to make sure it does. Another mistake that investors make is when it does dip, they go in, oh, I'm losing all my money, let me sell. They sell at the bottom, then all of a sudden the next day or the next few hours, it'll run back up, right? And when it runs back up, you've lost because you sold at the wrong time. So it's best, if you're going to do that, not to look at it, just do a buy and hold or do ETFs that's not going to drop as fast and as hard as some of the single stock will, if that's what you're worried about. But these are some of the mistakes investors make when they're investing, and I don't want you to make those mistakes. Now, as a bonus tip, since you've stayed to the end of this video, I want to give you, I've done some research and I found the worst month for the stock market and the absolute best month for the stock market. Guess what the worst month is? I'll give you a chance before I reveal it. Okay, I don't know if anybody got it, but drop me a note if you guessed the worst month. The worst month for the stock market is September. September is historically the worst month for the stock market. Now, let's turn to the best month for the stock market. Guess that. Put it in the comments below. The best month for the stock market is November. This has been one of the strongest months for the stock market, followed by December. They call it the Christmas rally in December. So there are some strong months, and there are some months historically that are, bad months. But as long as you're continuing to invest, and then all the other months are either somewhat good, somewhat bad, but these are the absolute worst and best months for the stock market. And they have little names for some of the other months. and you can go research those for yourself. But don't be afraid to get in the stock market because it has its season, just like all of the strategies, they have their seasons. Basically, some of them, when they go down, they're going to go down. That's normal. When they go up, they're going to go up, and that's normal. Just when you're flying on a plane, you're going to hit air pockets, right? So it's normal for you to hit air pockets. Don't think that, oh, we're falling apart because we hit an air pocket. It's not like that. The plane is built to hit air pockets and continue flying in the air to get you to your destination. So understand what you're in and don't worry about when it goes down. If the reason that it's going down is because of some announcement or something like that, and the actual company has not changed, that company, is still strong, is still going strong, you're fine. So let's not get worried and concerned about that. Okay, I want to give you that last little tip. And with that, hopefully you've gotten something from this video. Drop me a comment down below and I will see you in the next video.
Go Adrian. Humble, go get a bless. Let's go.